Hi, welcome back to another one of my videos. Today I'll be talking about Cineworld. Now, I've had a look at all the data and what it suggests to me, I could be wrong, but what it does suggest to me that Cineworld is going to go up at least by, I reckon, 30%. Currently, the way I see Cineworld, it is massively undervalued. The reason being due to the pandemic, they've not had any customers, they've shut the businesses, and obviously being a cinema, people are very close to each other, so they had to think of ways to ensure the safety of people before opening up. Now, why do I think it will rocket up? On the 10th of July, customers will start coming into Cineworld and they'll start spending money, and that should give investors some assurance that yes, they are going to make money and they're not going to go bust like many other companies. Also, one thing I always look at is asset and liabilities. If you look at the assets and liabilities, they don't really have much debt compared to other companies. It's around 70%. I'll show you all the ratios towards the end. So wait till the end of the video and you can see how exactly I've come to that conclusion. Another thing with Cineworld, people will start going out. There are a couple of films that were due at the start of the year, but they've delayed it. For example, the James Bond film, which should be coming out towards the end of the year. It may take a while for Cineworld to start generating income, but I think it is looking positive for them, especially when many other companies have gone out of business. So they've captured a lot more of that market, especially the small cinema chains. They've currently gone bust because they couldn't afford to keep open. So that allows Cineworld to capture more of that market share. Due to the pandemic, there's been massive travel restrictions. So a lot of people won't be traveling abroad this year for the summer holidays. So I think a lot more people will do local based activities and stay within the local areas. And the most obvious choice is to go watch a film with your family or friends. As you can see, I've bought about 1,500 shares between 66 to 67 pence per share. Now, it has dropped slightly due to people worrying there's going to be another outbreak coming soon. So generally, all shares dropped. However, it's not a massive concern for me because I believe the minimum we'll get to, especially by the 10th of July, is £1. And you can see this is a 1 day time frame. You know, about 8-9 days ago, it was on that £1 mark or near enough. So I'm very confident it will. Now, in terms of how I looked at this, and you can see they're the exact price I bought at. So I bought 500 at 66p and 1,000 at 68p. Currently, it's in a loss, but again, I'm positive it will go up. If you look at company details, that gives you information about the company, what it's all about. Now, for me, this is the key part. I look at the income statement. Their revenue is 4.37 billion and their net income is 180 million with a profit margin of just over 4%, which for me is really good. You know, historically, they've been making profit. This is really the key, especially around this time, to see how healthy a company is. If you look at the balance sheet, you can see the total asset is everything that they own. This was in 2019. It was 12.45 billion. That's generally going to be things like buildings that they own, properties that they own, or any other sort of investments they have. The total liabilities is a large number, 9.51 billion. However, they've got 12.45 billion of assets. So it gives them a debt to asset ratio of 76.4%. What that means is if they were to totally go bust, they'll still have a couple of billion left over. So the company still has some sort of value.